Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on Wednesday, July 19th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we've got a jam-packed episode for you. We'll discuss RFK Jr.'s bold pledge to use Bitcoin and other assets to stabilize the U.S. dollar and his vow to exempt Bitcoin to U.S. dollar conversions from capital gains taxes. We'll also delve into the SEC's countdown on deciding whether to approve 6 applications for Bitcoin ETFs. We'll touch on the criticism from 2 Republican members of the U.S. House of Representatives on the SEC's approach to regulating cryptocurrency. We'll also talk about Forge, a subsidiary of Societe Generale, making history by becoming the first company to get the highest access license for providing cryptocurrency services in France. We'll discuss Shinhan Bank's successful proof-of-concept project using stablecoins for international remittances. We'll look into the cooling hype around China's central bank digital currency, the ECNY. So buckle up, we're about to take a deep dive into the world of crypto. U.S. presidential candidate Robert F. Kennedy Jr. made a bold pledge. He promised to use Bitcoin and other assets to stabilize the U.S. dollar. He's talking about backing the dollar with tangible, finite assets like gold, silver, platinum, and yes, you heard it right, Bitcoin. This isn't just talk. He does have a plan. He's considering starting small, backing just 1% of issued T-bills with these hard assets. Now, why is this a big deal? RFK Jr. believes this could restore strength to the dollar and keep inflation in check. He's even said, quote, "Ironically, we'll be able to use Bitcoin to save the US dollar." But that's not all. He's also looking to encourage the proliferation of Bitcoin and to protect self-custody. He's made it clear that your wallet should be your own. He even wants to ensure Americans can run Bitcoin nodes right inside their own homes. Now let's get into the nitty-gritty. RFK Jr. also announced that he would exempt the conversion of Bitcoin to the US dollar from capital gains taxes. That's huge. It could spur investment and incentivize ventures to grow businesses right here in the US, instead of looking to other crypto-friendly jurisdictions like Singapore or Hong Kong. RFK Jr. is looking to promote innovation, protect privacy, and make it harder for governments to use currency against free speech. He noted that non-taxable events are unreportable, which means it will be more difficult for governments to weaponize currency against free speech. Editor's note, it's an interesting tack he's taking. I do like the idea of tying the ability to transact freely and privately with free speech, which is something that most people can get behind. This is a clear stand against the current system, where the Internal Revenue Service treats crypto as property and investments rather than currency, thus subjecting it to capital gains tax. RFK Jr. made it clear he believes it's a mistake for the U.S. government to hobble the industry and drive innovation elsewhere. He even called out current President Joe Biden's proposed 30% tax on cryptocurrency mining as a bad idea. So let's look at the potential upsides of his revolutionary proposal. The key word here is diversification. We're not just backing the dollar with one asset, but a mixture of gold, platinum, silver, and Bitcoin. This diversified portfolio could lend unprecedented robustness to our financial system. Plus, this move would be a seismic shift towards mainstreaming cryptocurrencies, encouraging wider adoption and sparking innovation. And let's not forget the capital gains tax exemption for Bitcoin conversions. That could attract investors like bees to honey, fueling economic activity right here in the good old US of A. Now, we would be remiss to not address the potential risks. Bitcoin, as we know it, is volatile. Its wild price swings could introduce significant instability if we tie it too closely to the dollar. And while getting rid of capital gains tax on Bitcoin conversions could draw in investors, it might also encourage reckless speculation, creating a potential for economic instability. Then there's the unpredictable reaction of financial markets. A move this big could have unforeseen consequences. Finally, the sheer regulatory and implementation challenges of such a plan are not to be underestimated. RFK Jr.'s bold vision certainly presents a high-stakes gamble. This could be a game-changer for all of us. It's a clear sign that the winds of change are blowing in the world of crypto and government policy. Let's see where they take us. Stay tuned for more updates, folks. Now, before we dive into our next story, don't forget to hit that like button, subscribe, and turn on notifications so you never miss an episode. Now, let's move from the political sphere to the regulatory one. The SEC has started the clock on 6 applications for Bitcoin ETFs. Let's see what this could mean for the future of crypto. And this is our cover story for tonight. This week, the U.S. Securities and Exchange Commission is starting the countdown. They're deciding whether to give the green light to 6 applications for spot Bitcoin exchange-traded funds. And guess what? One of those applications is from BlackRock, a real heavyweight in the industry. Bitwise's Bitcoin ETF Trust's application is already on the Federal Register, and the others are set to join it on Wednesday. Now, what's this Federal Register? It's like a daily newspaper of the U.S. government. It's where they publish executive orders, regulations, proposed rules, and other official stuff like that. So when an application for a Bitcoin ETF hits the Federal Register, that's when the SEC starts the clock. They've got 45 days to decide, but they can stretch that out to 240 days if needed. And let's be clear, there's no guarantee that the SEC will approve any of these applications. But the fact that BlackRock, a big player, has thrown its hat in the ring has got people thinking a shiny new ETF might be in the cards. Another application for a Bitcoin ETF, this one from ARK21 shares, made it onto the Federal Register back in May. But the SEC decided they needed more time, so they pushed back the deadline in June. And then there's another player in the game, Valkyrie. Their spot Bitcoin ETF isn't on the Federal Register yet, but the SEC did accept their application on Monday. So what does all of this mean? Well, the world of cryptocurrency is heating up. Big names are getting involved, and the SEC is under pressure to make decisions. As we know, the government works in mysterious ways. Will they embrace the future of finance, or will they stick to the old, tired ways? Only time is going to tell, folks, but one thing is for sure, we will be here, watching, waiting, and ready to bring you the news when it happens. Before we move on, remember to follow us on your favorite podcast platform. Now, let's shift gears a bit. We've heard from the regulators, but what about the lawmakers? 2 Republican U.S. House of Representatives members strongly oppose the SEC's approach to regulating cryptocurrency. Let's find out what they've got to say. Republicans French Hill and Dusty Johnson are members of the House of Representatives. The pair of lawmakers have voiced their concerns about the SEC's approach to regulating cryptocurrency. They believe the SEC's actions are designed to overshadow and undermine efforts to create comprehensive legislation. They argue that the SEC's practice of regulation by enforcement does not lead to compliance or customer protection. Instead, it creates confusion, as seen with Ripple's partial victory in its court battle with the SEC. Hill and Johnson also pointed out that the SEC's actions seem timed for maximum publicity and political impact, coinciding with the related congressional activity. This comes at a time when the crypto landscape in the United States is shaky following the collapse of the FTX exchange and other major crypto businesses. The aggressive regulatory moves have led surviving companies to seek friendlier jurisdictions and deferred startups from setting up in the U.S. The lawmakers are particularly concerned about the timing of the SEC's suits against the leading crypto exchanges Binance and Coinbase. They come just days after Republican chairs of 2 House committees released a draft proposing an overhaul of crypto regulation in the U.S. Hill and Johnson argue that legislation, rather than enforcement actions, would do more to prevent future collapses of digital asset firms. Now, let's shift gears and look at the perspective of another lawmaker, Representative Richie Torres. Torres, a House Financial Services Committee member, called on the SEC to refocus its efforts on going after bad actors in the crypto sector. This, too, comes in the wake of that split decision on the ongoing dispute between Ripple and the SEC. Torres hopes that the SEC will be so chastened by the court's decision that it will concentrate its enforcement energies on the real bad actors who continue to commit serious transgressions like fraud, market manipulation, and the misappropriation of customer funds. The ruling that XRP was not a security when sold on the secondary market in blind bid sales was a cause for celebration among the cryptocurrency advocates. However, the judge did side with the SEC, stating that their token was a security when sold to institutional investors. Torres believes this decision could have future implications and constrain the SEC's ability to make up the law as it goes along. Gary Gensler expressed disappointment over the treatment of retail investors in the judge's decision. The SEC chair said that it was too early to tell whether the SEC will draft more crypto-specific rules following that decision. Torres did not set a deadline for when he wants a response from the SEC, leaving the ball in their court. It's clear that the battle between the crypto world and the regulatory bodies is far from over. As enthusiasts and skeptics alike watch these developments, one thing is for certain. The future of cryptocurrency remains an exciting, albeit uncertain, frontier. All right, folks, before we move on to our next story, remember to hit that like button and subscribe to our channel. Now let's take a trip to France, where a subsidiary of Société Générale is making history in the crypto world. Société Générale is the third largest bank in France, and Forge is a subsidiary of Société Générale. Well, Forge has made history. They've become the first company to get the highest access license for providing crypto services in France. Seems like a big deal. This license, known as the PSAN, is a prerequisite for a lot of service activities. With this, Forge can custody digital assets, buy and sell them for legal tender, and even trade them against each other. The news caught the attention of the French stock market regulator, the Autorité des Marchés Financiers, or AMF. Société Générale representatives has said this accreditation is the highest level of regulatory certification currently possible for the digital asset transactions. Now, there's about 90 companies on the AMF list of licensed providers. Even the subsidiary of Société Générale's powerful competitor, Crédit Agricole, got approval for digital custody in June 2023. But Forge is the first to receive the highest approval for numerous services from the regulator. Now, this level of approval has stringent requirements, which gives an obvious advantage to large traditional banks over smaller crypto companies. Société Générale has been quite active in the crypto sector. They've issued Eurobonds on the Ethereum blockchain and security tokens on the Tezos blockchain. They've even proposed DAI stablecoin loans in exchange for bond tokens. In April 2023, Forge launched a euro-pegged stablecoin for qualified institutional clients. This new digital asset is only available to investors onboarded by Société Générale through its existing Know Your Customer and anti-money laundering procedures. This move by Société Générale is a significant step in the crypto world. It shows that traditional banks recognize the potential of digital assets. But let's not forget, these are the same banks that have been part of the system that we've been trying to change with crypto. So while it is a win for crypto, it's also a reminder that we must stay vigilant. We must ensure that the spirit of decentralization that drives crypto is not lost in the rush to mainstream adoption. So let's celebrate this win. But let's also remember why we're here in the first place. And it's not just about making money. It's about creating a financial system that's fair, transparent, and accessible to all. And that is a fight we are still very much in. Before we move on, remember to follow us on your favorite podcast platform. Now, let's shift gears a bit and head over to South Korea, where Shinhan Bank has been making waves with its stablecoin project. Shinhan Bank wrapped up its second proof-of-concept project using stablecoins for international remittances. Stablecoins are a type of cryptocurrency pegged to a reserve asset, like the dollar or euro, making them less volatile than other cryptos. In this project, Shinhan Bank partnered with SCB TechX, a unit of Thailand's Siam Commercial Bank, and one other financial institution from Taiwan. They used the Hedera network to settle real-time payments in South Korean, Thai, and Taiwanese currencies. This is interesting because it shows how crypto can make international money transfers faster and more efficient. Now, this is where it gets interesting. This project was compatible with EVM, the Ethereum virtual machine. That means it could potentially be used with a whole bunch of other stablecoins. In their first proof of concept last November, Shinhan Bank worked with South Korea's Standard Bank. They created a pool of stablecoins backed by the South Korean won and the partner bank's local currency. Users could buy these stablecoins and send them to an account at a partner bank, providing funds in the locally denominated stablecoin. So what's going on with all this? Byung-hee Kim heads the blockchain division at Shinhan Bank. Kim said using Hedera's technology helps eliminate intermediaries, reduce costs, and speed up remittance. This is a big thumb in the eye of traditional banking systems, which are often slow, expensive, and hard to track. In fact, an official from the International Monetary Fund said remittance providers collect a whopping $45 billion in fees. And that's $45 billion every single year. That's a lot of money that could be saved if more banks followed Shinhan's lead and embraced stablecoins. But here's the kicker. Stablecoins offer an alternative to central bank digital currencies and Web3 remittance solutions. Now, there's a lot of CBDC projects, and some are specifically designed for remittances, but few have actually been launched. So that technology is still on shaky ground. On the other hand, stablecoin-based remittance solutions are becoming more common, especially in Latin America. That shows that the crypto revolution is well underway, and it's the banks and governments that are struggling to keep up. So what do you think? Are stablecoins the future of international money transfers? And how do you feel about banks and governments playing catch-up in the crypto race? And speaking of CBDCs, our next story focuses on the dying hype around China's digital yuan. And we have a CBDC alert. I need some sort of siren or a foghorn or something for CBDC alerts. At any rate, this time we're talking about China. Specifically, we're looking at China's central bank digital currency, the ECNY, also known as the digital yuan. Remember the hype last year? The Chinese government was all set to show off its new tech at the Winter Olympics. But guess what? That hype has cooled down. The People's Bank of China was all gung-ho about testing the CBDC. They even rolled out a pilot app in January of 2022. By the end of the year, the value of the CBDC in circulation reached a whopping 13.61 billion won, which is about $2 billion. But now, the excitement has fizzled out. Richard Turin is a fintech consultant based in Shanghai. He says there's a lot less loose about digital yuan now because People's Bank is doing the, quote, hard or dirty work. That kind of thing is less newsworthy than launching pilots. Yao Wei Yang is the chief economist of BitMining, and he agrees. He says the hype has faded. Matteo Giovanni is a senior finance manager at the Industrial and Commercial Bank of China. Giovanni says the momentum hasn't completely vanished despite the hype dying down. He believes the ECNY is still the world's largest, most effective CBDC pilot in terms of the amount of currency in circulation and the number of users. But here's the kicker. The central bank might be shifting its focus to B2B promotion. Stanley Chow, managing director of US-based strategy firm All In Consulting, says the PBOC tried to market their digital fiat from a retail perspective. They tried, but that backfired. Now they might be pushing banks to pay salaries via the ECNY. That could compel more retailers to accept the digital currency. DBS Bank recently launched an initiative that allows corporate clients to receive payments in the digital yuan. But will offshore entities favor ECNY for widespread settlement? That remains to be seen. And let's not forget the big players, Alipay and WeChat Pay. They've integrated the ECNY into their payment systems. However, it still needs to overcome significant headwinds from these existing large payment channels. Don Day, Chief Operating Officer of the Hong Kong-based crypto platform VDX, says there's no tangible benefits to users above the payment channels already offered. Basically, incentivizing users to spend ECNY and merchants to accept ECNY is likely the only way to bootstrap retail users into the ECNY ecosystem. So there you have it, folks. The ECNY, once the talk of the town, is now facing challenges and a shift in focus. But remember, in the world of digital currencies, things can change in a heartbeat. So what happened? We covered a lot of ground tonight, folks. We discussed RFK Jr.'s bold pledge to use Bitcoin and other assets to stabilize the US dollar, and his vow to exempt Bitcoin to US dollar conversions from capital gains taxes. We also delved into the SEC's countdown on deciding whether to approve 6 applications for Bitcoin ETFs and the criticism from 2 Republican lawmakers of the US House of Representatives on the SEC's approach to regulating cryptocurrency. We touched on Forge, a subsidiary of Société Générale, making history by becoming the first company to get the highest access license for providing crypto services in France. We also discussed Shinhan Bank's successful proof-of-concept project using stablecoins for international remittances. And finally, we looked into the cooling hype around China's central bank digital currency, the ECNY. And that's going to do it for us, folks. I want to thank you, my listener, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.